Hey, good evening. It's Dr. Jeffrey Scott. It's after hours on Tuesday, November 12th. And considering what we saw in the market and the upcoming data, I thought I'd do a very quick market MRI Pro walk through the markets that we have right now. So I'm in my weekly timing model. This doesn't change, don't count until the end of the week, but just showing you that on a weekly model, we are in a buy mode on the spiders, Qs, diamonds, and Russell. On the daily model, which maybe we should be more concerned about with the rapid changes, and I am, you could see we are still in a buy mode. So even though Tuesday was a tough day in the markets, we've got some big news coming, a CPI, then a PPI, and some jobless figures over the next couple of days, and a bunch more Fed heads and an opportunity for the markets to move. They can move both ways. I do think we're going to probably pull back some. I think pullbacks into the WMA area, which occur from time to time, especially when one looks at the weekly chart, would not be that surprising. That said, if inflation comes in on the light side, we could see the Trump rally continue even more. So nothing has changed in the timing model, and you can see on the dailies here, the 3-month new high, new low has come off of a overbought area and has taken some of the perhaps reversion to the mean risk off. When we look at the market brief, we'll look at start with the performance view, and you could see a couple of things. Over the last day, everything was down, even volatility on the VXX. The big loser on Tuesday was the Russell. Over the last 5 days, everything has been up significantly. The big winner has been the Russell, with the VIX down considerably. If we look at the closing range in the session, you could see that the Qs and the spiders down modestly, closed near the center of the range, but the diamonds and the Russell sold off and are at the lower part of their range. We are still seeing a considerable number of new highs and new lows, but those have backed off some. Over here, you could see the deterioration that we saw in the market on Tuesday. You have the S&P 1500, which I love because it's got the 500 large cap, 400 mid caps, and 600 small caps in one index. You got the NYSE, which is a very large index with a lot of weird things in it, but a lot of energy and regional banks. And then you got the NASDAQ, which is you have the tech. So you could look at the first thing and what percent of the sectors were positive. Well, none in the S&P 1500, only 8%, which means one sector in the NYSE, and no sectors were positive in the NASDAQ. So that gives you a sense of how broad-based negative the session was. How about industry groups? 17% higher in the S&P 1500, 20% in the NYSE, 18% in the NASDAQ. So only 1 out of 5 industry groups were up on the session. And then how about advancers? 23%, 23%, 31%. So that means 60 to 70% plus of stocks were down in the market on Tuesday. And then lastly, the one that doesn't move very fast, above the midline, 69%, that's still a bullish number. 57, less bullish, still bullish, as is the 58. So nothing really deteriorated on a big scale, but there's clearly weakness, and you could see the weakness, at least in one day, on the sectors and industry groups. If we look at where the change was to the upside, you could see communication technology. Interestingly, staples, which has been a laggard, flip-flop with discretionary. But if you look at over 5 days, a whole different picture. I'm going to turn that one off. Over 5 days, discretionary, financials, communication, industrials, technology, and energy are all up above 4%. And then there's a big split because now all of a sudden utilities, staples, healthcare, materials, and real estate are flat to down up to 2% over the last 5 days. So a clear-cut division of Trump winners and Trump losers from sectors. If you look at what's been leading from an industry group, data, fintech, tech, cloud, cyber, aerospace, defense, internet, cyber exploration, and oil infrastructure development have been some of the big winners, 6% and higher move on the week since the election. And if you look at the 5 days, what's the losers? Cannabis, solar, clean tech, gold, copper, silver, China, renewable energy. So sort of some of the green plays are in there. If I look at 1 day on the theme ETFs, you could see cannabis had a big bounce, but it's still down 30% in the last 5 days. And then very few of these were up. Clouds, uranium, some of the tech stuff. And the big things to the downside, China, solar, clean tech, copper, keeping to that theme of the out of favor in a Trump presidency. So clear-cut weakness that we haven't seen in a week. On the bucket view, you're going to see a reversion to the mean. We've been talking about a shift to the right where more and more stocks were in the upper part of their Bollinger Bands. This gray bar here is where we were yesterday. And you could see, let's kill the 5 of the week ago for now. You could see how we've come down significantly and actually started growing on the stocks below. This is a pretty neutral to bullish picture, even though it came off some of the overheatness in the market on Tuesday. And on the breadth view, I look down here to see if there's anything new on a Hindenburg Omen, a Eureka, Phoenix, a Bango, or a Bongo, or the soon to be revealed the defibrillator, which is what you get on a really good bottom. Well, we're nowhere near a bottom here. So you can see the daily charts on the NYSE on the left, on the NASDAQ. Yeah, we're pausing up here. We're doing some consolidation. We really haven't rolled over. When you look at stocks above the 200 in red, the 50 in white, the 17 in green, still a bullish picture, although seems to be weakening. And if you look here at new high, new lows, still positive. AD lines did flip on both the NASDAQ and NYSE, and the up-down volume is still positive. So breadth has deteriorated some, but it's not totally gone to a bearish picture. Now let's go back into the ratios and see what's been outperforming the spiders. And communications, discretion actually gave up some in the session. Financials look strong, but discretionary still looks good. Industrials looks okay. And staples, despite the being up a bit in the market, probably because it's defensive, utilities, real estate, materials, and healthcare are not participating in the Trump rally. If we go and look at the JAS layout, you could see in the JAS layout that I've got 3367. Again, this includes the NYSE and the NASDAQ, filtered for $1 and 100,000 shares, and that creates the universe. Now, when I go into top down, it's going to take the stocks that are in my list, apply them into sectors and industries, and give me a sense of what's working. The search here, as we showed you, is based upon the short-term momentum on both the sectors and on the industry groups and the stocks. That happens to be my favorite sorting tool. Now you could see that, again, this isn't 1 day performance. They're all negative, but tech, finances, and communications, and then discretionary come up to the top. And then over here, we have 144 industries, so the entire market, and I've just got them ranked. Up top is software application. When I click on it, it's going to drop the number to the number of software applications to 159. That was, right now, is one of the strengths in the market. And if we look at it, Shopify, which just blew out earnings in the market on Tuesday, and I think, let's see if we're updated yet, 11/12, beat by 12%, beat revenue by 9%. Interestingly, it was not a surprise. It was a negative surprise, but sometimes it's not what the surprise is, it's what they talk about going forward. And obviously, Shopify reacted really well with a pretty massive breakout. Don't like necessarily where it closed. It's at 100% on the high jump, so not one that I typically chase. MicroStrategy, we talked about that, and some of its peers in the Bitcoin space on yesterday's video, and you could see opened down a bit and closed higher, up another almost 5%. HubSoft, I look at this and coulda, woulda, shoulda. It's hard for me to buy a stock that's extended like this. Coin did not do very well in the market on Tuesday and actually lost 1.5%. This is one that we talked about. I think we looked at the monthly or the weekly and showed how this is one that had this massively great IPO, and that was the high of the company. And perhaps we're getting to the point, here was the IPO high all the way up here, that we're now getting, there's a massive cup handle and a breakout. Maybe the world has changed for coin, and maybe I should change my mind based upon that pattern and go long. But certainly it looks like it's moving. The big winner that we talked about for the last quarter is APP. And you could see, although Monday it showed some weakness, it had another strong day on Tuesday and was again back up almost 1%. So top down, I pull up this industry group. From the tops, I could hit technology here, for example. Let's turn off application software. Let's hit technology, and you can see there were 517 stocks in technology. I might say I only want to look at the top 3 of the industry groups. So we hit infrastructure had 103, application had gone to 262, and electronic gaming, oh, come on. There you go. So 273 are in the top 3 groups, and you're going to see the same names that we saw. So I can turn those off, and I could go and I can look at financial services. So hit that. So now there's 17 industry groups in financial services. And oops, try that again, one more time. I double click things that I'm not supposed to. So you can see 434 stocks. Sezzle was one that coulda, woulda, shoulda that we talked about multiple times, gave up significant amount this session. Interactive brokers looks really strong here, but getting extended. AGO, Assured, Guarantee Life Insurance, don't like the reversal here. But in a top-down manner, I would identify the strongest sector, maybe pick the top 3 industry groups in that sector. 1, 2. And notice how the top 3, and really many of them in the top, are insurance. And I would rank them, and then what came to the top is MSCI. And I think one that we looked at again in the market in the review yesterday or over the weekend. This one looks interesting here. It's not extended. It's at 48. Good news on the OBV and the relative strength. The EMS has turned positive. It just had a CPR. So that might be something. So typically I will look at the top 5 to 10 industry groups. I'd look at the top 3 in the first bunch of sectors, and I'll start to build out a watch list of the leading stocks. Now, that is top-down investing at its finest. You find the best patterns, and that's what you go for. Sometimes I want to do bottoms up, and I just wanted to show you that here. So I'm going to go back to the impulse. back to my 3367. I want to go into my filtering tool. I know you're going to let me do this. All right, there we go, it's lit up. So first thing I want to do is I only want stocks above their 200-day. So that takes the 3367 down to 2,000. I want volume over 500,000 share. That's what I like to trade. Takes it down to 1305. I want price over $5. Takes it down again. And that CPR is it's a moving average crossover that looks for reversals. And I want to look for the multi-time frame CPR buy, because this will be a list of stocks where the weekly has reversed and the daily is reversing. And the weekly bar has to be the last close bar, which would be last week, the weekly started turning around, and now I've got a daily. So let's see what comes to the top. If you watched the Stocks and Docs video, you would have seen ALT was one of my choices, and ALT has taken out these highs. Massive breakout, massive volume, breakout momentum out of a squeeze. EMS is positive. It had the CPR, OPV, and RS look good, not extended. I might look in here, get a sense of earnings. I believe earnings might be out. Earnings were due on the 12th, so they're out. I'd verify that. I do believe they're out already. But this is one that I liked. Now, how do I know the weekly is going to be blue as well on the CPR? Because that's what we filtered for. We look for stocks that on the weekly, last close weekly bar, which is this one, gave me, actually, is that weekly? It means that the last signal, my bad, it's not just last week, it's currently in a CPR buy signal, so the weekly is in an uptrend, and the daily went to an uptrend on the bar in this session. So that's ALT. Amazon made the list. You could see the CPR down here, little pullback. Maybe it's getting set to run. Axazo is one we talk about a lot among my friends. This was on my list of one of the biotechs to get bought. Well, they didn't get bought. They actually built a biotech company that makes money. And you could see, or at least it has revenue, and you could see not making money yet, but revenue is growing. Growth on, or improvement in their losses and growth in revenue actually broke $100. Never thought that would happen without an acquisition. Other things on this that looked interesting, Nordstrom's, what the heck? Somebody expecting something? Now, this is interesting. It really hasn't done much, but this suggests to me that it's sitting down here. Is it getting ready to run? I wouldn't be taking that yet, but that's something to be watching. And then I'll just finish by something you've probably heard of called NVIDIA, joke. Getting set up, looks like it's getting ready to run. And that new CPR signal tells me to pay attention. So I just wanted to show you some of the differences in the tool between top down and bottoms up. Have an awesome day in the market. We'll see you later in the week.